Ladies and gentlemen, good day and welcome to Astra Microwave Products Limited Q4 and FY23 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. S. G. Reddy, Managing Director. Thank you, and over to you, Mr. Reddy.
Thank you, Nirav. Good morning to everyone, and a warm welcome to all the participants to the post-results earnings call of our company. I am with my colleague, Mr. M. V. Reddy, Joint Managing Director, and Mr. Atin Kabra, Director of Strategy and Business Development, and SGA, our Investor Relations Advisors. The results and investors' presentation for the Q4 and year-end are already uploaded on public platform. I hope we had an opportunity to look at it. It has been a milestone year for us as we have successfully completed our PIP and registered our best financial performance ever across all matrices. We closed the year with a top line of 807 crores, EBITDA of about 18%. Our order book position is very healthy at 1,544 crores. We are also happy for the note of confidence expressed in our abilities by leading institutional investors in India and outside in our capabilities and growth prospects. Before we talk about our performance in detail, we wish to inform you that during the quarter, we have booked about 115 crores worth of orders, mainly comprising of 48 crores from radar, 17 crores from EW, and 7 crores from missile electronics. On the sales front, out of 253 crores, radars have contributed to 56 crores, EW is about 29 crores, missile electronics 16 crores, and exports about 138 crores. During the quarter, the company has responded to rupees 350 crores worth of businesses through RFPs and closed purchase negotiations for 130 crores, which is entirely for the domestic market. During the quarter, company has signed MOUs and other means of partnership with Indian and foreign partners to deepen our product and the technology expertise. I am not able to get into the specific details because of the strategic reasons. Overall, there are various tailwinds in the defense space for players like us. Globally, the countries are spending large amounts of money in the military. Our government, which spends about close to 3% of GDP on defense every year, is highly focused on increasing self-reliance. This mission is driven by increase in R&D spend by DRDO labs and also by encouraging to invest in developing products on NCNC model. With our long-standing relationship with our customers and several years of experience in high-tech oriented products, we stand to benefit immensely from this boost. In fact, we are working on various items which are part of government's negative list, and this presents a gamut of opportunities for us. Coming to our standalone performance for the Q4, the revenue stood at about 256 crores as against 239 crores for corresponding year of last year, growth of about 7.3%. Gross margin is at about 28%. The domestic sales contributes higher margin compared to the export sales. In the last two quarters, the margins have improved in a very strong way because the domestics were more compared to the exports. However, in the quarter ended Q4, there is a slight correction because the export revenues are higher compared to the domestic sales. Talking about full year performance, the revenues stood about 807 crores as against 735 crores for the last year. Gross profit has increased by about 36.7%. Due to change in the geographical mix as compared to the last year, the overall domestic sales are higher in the current year. Similarly, the other gross margins have improved, profit margins have improved, essentially because of the change in the product mix of the company, wherein the domestic sales have contributed more compared to the export sales. The Board of Directors have recommended a dividend of about 1 rupee 60 paise per share, that is 80% for the year ended financial year 2023. At the end of the quarter, our standalone order book, as I said earlier, is at about 1,544 crores. This order book consists of 24% of exports and 76% domestic orders. From this order mix available, it is clear that in the coming years, domestic business will be a major contributor to the overall business of the company, which means improved gross margins. In the other order book update, I would like to share with you our joint venture partner, a joint venture company, Astra, has very recently won an order of about 158 crores from Hindustan Aeronautics Limited for supply of software-defined radios, which is executable in the next financial year. With a strong order book and inflow for financial year F24, we are confident to have a top line of about 900 to 950 crores and at a PBT of about 150 crores with a plus of 10% this way and that way. We have improved our profitability compared to the last financial year as explained above, and this is likely to improve further because of the change in the overall product mix of the company and also with the proper utilization of the QIP funds which were raised very recently. The QIP of 224 crores, which will give a strong boost to our future growth by investing in newer technologies and develop newer products. Company has identified about 10 products or projects to invest proactively and expect to come out successfully in the next 3 to 4 years. This proactive investment should help the company to sustain and improve its top and bottom line in the long run. The company is also in discussion with startups and small-sized companies with unique expertise to jointly develop newer products with a joint ownership and sharing of profits. The idea is to have a larger pool of products to target wider market space within defense and aerospace. To conclude my opening remarks, I would like to highlight that Atmanirbhar Bharat is becoming a reality and the industry is making great strides and Astra is well poised to capture this opportunity. Now I will hand over to Mr. Atim Kabra, Director of Strategy and Business Development, and to Mr. M. V. Reddy, Joint Managing Director, to share their thoughts. To start with, Mr. Atim Kabra will take over.
Good day, everybody. I want to take this opportunity to sketch out the broad contours of our vision at Astra. As you are very well aware, we have today completed a significant milestone in our journey so far, where we have progressed from being a subcomponent manufacturer to a systems level entity, as we have continuously moved up the value chain over the years. This journey is no different from what has been successfully accomplished and demonstrated by India's very successful IT industry. Likewise, we moved from being a subcomponent supplier to a component supplier to being a subsystem for guys, and now we deliver complete systems also. At this point in time, we wish to also focus on creating multiple solutions. And I reiterate, Astra branded solutions around our core competencies in RF and microwave domains. We want to transition from merely supplying radars and subsystems and systems to possibly supplying complete solutions, which will encompass radars and subcomponents and subsystems as their core and around which solutions will be built, leveraging our extensive R&D capabilities as well as in-house supplemented, as SG very rightly pointed out, by externally sourced capabilities through collaborations. An exercise is on within the company to identify strategic growth areas with large total addressable markets, where we can identify specific market opportunities and niches where specific solutions can be offered. Yeah, I'm going to illustrate this with some broad examples since it's early days. Should we be content with offering anti-drone systems, or shall we be expanding our offering and offer complete anti-drone solutions? Is a question which we are debating. Are there other areas where the core tech powering anti-drone solutions can be applied to address different customer bases, and both horizontal expansion of our offering can be achieved with a vertical deepening of our capabilities? Or should we be just supplying ground penetration radars, for example, or create solutions around ground penetration radars which can help in, let's say, disaster management or better surveillance in our border areas, etc., etc. Should we be exploring further extended applications of our RF receivers and data loggers to expand our weather-related offerings and other such related offerings which arise from such capabilities? Should we be exploring launching Astra-made satellite payloads? Should we be exploring the next front line of warfare, which is space? Should we be focusing on establishing satellite communication systems, or take our vision, as SG had mentioned, of a self-sufficient India by exploring controlling satellite communication links both ways? These are a few areas and domains which are being explored as we speak. Work has commenced on these, and this transition from almost exclusively being a tender-based business to an on-demand ready solutions company comes at a very opportune time where we have the required skill set and the tech within the company to achieve higher margins and an extended product range, which will give a further significant boost to our top line. We expect to start seeing results from these initiatives over the next couple of years, and expect that our solutions will become a significant contributor to our overall revenues over a period of time. I will add that we further intend to undertake a few initiatives to link Astra with various research-based institutions of higher learning and harness resources and the tech being developed there for our solutions. Besides extending this collaborative framework to other defense companies and early-stage companies. We are not the only guys here. There is a whole range of companies which are engaged in myriad activities under the overall umbrella of defense capabilities. We hope to keep you posted as concrete plans take shape. I wish to reiterate that our overall target of achieving 10,000 odd crores worth of sales execution over the next 5 years remains very much in sight, and all these initiatives which I mentioned are meant to add a further impetus to the sales and margin enhancement efforts of the company, while building on our core strengths. I'm confident that with your blessings and support, we will be able to achieve a higher trajectory of both top line as well as margin growth. This is a broad vision which has been put in place, and as a successful QIP with a significant demand for Astra demonstrates, I think we are operating in a very, very favorable environment with headwinds helping us. With this, I'll hand it over to MV Reddy to further take you into more details on the order book, etc. MV?
Good morning, all of you. And I think Mr. SG and Mr. Asim Kabra have already shared the plans and also the vision of Astra. And I don't want to repeat the same thing. Now I think we can open for the questions and answers.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, you will wait for a moment while the question queue assembles. Participants, you may press star and one to ask the question. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Everyone, and thanks for giving the opportunity. I have a couple of questions. The first one is on your defense order book year ended FY23, which stands at 914 crores. If you could throw some more, light on the composition of this book, particularly with respect to the trade that and the orders that you received in defense particularly. If you could also throw some light on this, that would be great. That is the first question.
Yeah. Overall order book as on 31st March is about 1543. In that we have close to 914 crores in the defense. We want, since you asked for the breakup, with radar we have 497 crores. In EW segment we have 267 crores. Missile about 150 crores. And from space sector we have 212 crores. Meteorology and hydrology segment we have 55 crores. And then export front we have 362 crores. This is the breakup of order book what we have as on 31st March 2023. And coming to your question about the orders which we booked in the last quarter, that is in Q4, we have booked close to 115 crores. In that the breakup is all are like the defense segment. We have not booked any orders as such from the space or export front. That 60 crores are from R&D and 60 crores from R&D and production orders are 55 crores. And further the breakup is 47 crores from radar and 17 crores from EW and 7 crores from missile electronics. I hope I answered your question.
Yeah, that's very clear, sir. The second question is
I'm sorry to interrupt. May I request you to come in a better reception area, please? Your voice is breaking.
Is it better now?
No, Amit, your voice is still breaking.
Is it better now?
Yes.
Yeah. So my second question is around composition of revenue. This quarter, we found that more export order, export was much higher. It's 58.8%. So going ahead, FY24, will this export be roughly 30%, or there could be an odd quarter where we have this kind of surprise where export goes to 60% and above?
Yeah, in FY24, again, out of 950 crores guidelines what we are given, 300 crores we are planning to book from export segment. The rest all 650 crores from the domestic segment.
Okay, great. Thanks and all the best, sir.
Thank you.
Thank you. Next question is from the line of Vidit Trivedi from Commission Market Securities. Please go ahead.
Hi sir, thank you for the opportunity. My question is that could you please share me the development revenue mix of financial year 22 and 23 in the domestic defense revenue segment?
Domestic development and
Am I audible? Yeah, it's domestic defense revenue segment.
Yeah, I think we will come back to you on that. If you have any other question, you can ask. We'll give the reply during the course of.
No issues, sir. So my next question is on the line of MOU which has been signed between Astra and ELDIS. What's the status on that? Have we started working on that, and what's the revenue that we are expecting from that?
On the NAVIC front, right? So our products are almost now being approved, and official approval is still waited. The testing has been completed last 2 weeks. I think we more or less we are meeting all the requirements. Official approval will be pending in next weeks time, and once after that, I think the parallelly the development of products are going on. As mentioned in the last earnings call, we have launched development of vehicle tracking unit, cost receiver, and timing receiver. These are the products which we are developing for NAVIC application using the baseband chips.
Thanks a lot. And so I have one more question, and I would like to know your view on the Infinite Dome MOU for exclusive manufacturing for the Indian market. So your take on that, sir?
Actually we entered MOU with them, and we are working out modalities on that. I think maybe soon we will come out with the detailed modalities in that.
Okay, sir. Thank you, sir. I'll get back in queue. Thank you.
Yeah, sure.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A request to all the participants, please speak through handset while asking the questions. The next question is from the line of Jatin Jadhav from Sarasar Capital. Please go ahead.
Hello, good morning. First of all, my question is regarding the order book. I generally wanted to get an idea regarding how much percentage of the entire order book is executed in one particular quarter, or it varies quarter over quarter. And the second question is I wanted to understand, since you all are planning to expand into the anti-drone solution, so based on our existing capabilities, will it be easier to venture into that domain, or do we need to acquire probably a new company or some extra new talent in order to get into that? So these are just a quick question I have.
First question I have not understood.
In terms of the delivery of 950 crores, you are asking whether it is going to be a uniform kind of business, or there will be fluctuations from quarter on quarter. I think definitely there will be fluctuations. We have the quarter-wise numbers.
Yeah. Quarter-wise. I'll show you the quarter-wise numbers. Q1 we are targeting about 150 crores, and Q2 we have about 175, and in Q3 around 200 crores plus, and Q4 around 250 crores plus.
Thank you. So the line for the participant work. We move on to the next participant.
And the second question, you talked about anti-drone system. In the anti-drone, we have completed our development of indigenous counter-drone radar with the basic TOT from LRDE, and we have optimized the technology, and this particular system is being tested internally, and now we are taking it to the field. From July onwards, we are planning to go for NCNC trials for a couple of customers what we identified.
Thank you.
I think to add to your question, to add to MV's answer to your question, as far as the anti-drone system is concerned, we are, I think, almost there on our own capabilities. But as we develop further solutions around it, we may be partnering with a few entities for very specific inputs which may be required. We are primarily looking at a collaborative model.
Thank you. The next question is from the line of Bhavik Shah from MK Ventures. Please go ahead. Bhavik, may I request you to unmute your line from your side and go ahead with the question, please?
Yeah. Sorry, yeah.
Bhavik, your voice is not coming clear. Can I request you to speak through the handset?
Yeah, is it better now?
Yes.
So in the last question, you did mention the breakup of the sales which you are going to do, right?
Come again, your voice is not clear.
So in the last question, you gave quarterly breakup of the revenue you are going to book in FY24, right?
Mm-hmm.
So that doesn't come to 950 crores. So it comes to around 750 or 800 odd crores. Like you said, Q1 you will do 150 crores, right?
Q1 is 150 crores.
Yeah.
And okay, actually some small correction here. Q2 got 170.
Yeah. So can you just repeat Q1 150, Q2 170?
Yeah. And Q3, I think I mentioned 200, is 250.
Okay.
Okay. And the rest in Q4.
Okay. The remaining will be done in Q4. Okay. Yeah. And so regarding the margins going ahead, so like in FY24 and FY25, what kind of margins are we looking at sustainable levels? Like what is our order book margins like now, right?
The coming year, FY24, the PBT will be close to about 15 to 18%.
So this is at the PBT level or EBITDA level?
I'm talking about, this is the PBT what I mentioned to you, 15 to 18%.
Okay.
The EBITDA level should be close to about 20 to 25%.
Okay.
Yeah.
And so for any guidance for FY25 going ahead, like now seeing our order book?
Specific guidance is not there, but we can assure you that this will be an increment over whatever we are likely to do for FY24.
And so the new orders which we are booking right now, what kind of margins are we getting on that? Like is it the same levels which we are like showing in FY24?
Yeah, mostly these majority of these orders will come in from the domestic sector. Again,
Okay.
Mostly from the defense.
Okay.
The exports are likely to thin down over a period of time.
Okay. Okay. And so regarding the QIB, can you like be more specific on the QIB front? What kind of proceed usage are we looking at?
Sorry, what kind of?
Usage of proceeds are we looking at? Like where will be the proceeds used?
Yeah, as mentioned in the offer document, the majority of this money is going for the working capital. Okay, but again, working capital is a general definition what we have given. But the intent of the company is in investing in coming out with the new products. As I mentioned in my opening remarks, we have already identified about 10 programs, and the people have started working on that. So I would say that the majority of the money is going for proactive development of various products.
Okay. Okay. So we will basically repay the working capital loan we have, and from the free up capital, we will be investing in new avenues.
Yeah.
That's what I understand.
Yeah.
Right. And so any new specific developments which we may get to know about in coming quarters?
New developments in terms of product developments or otherwise in terms of business developments?
Say business development, maybe in kind of JV or any new order which we are expected, like the big orders which we are expecting?
JV has a potential to book big orders in the coming year, in the coming period. Only the timing is an issue there. But otherwise, it has a huge order book pipeline to be booked in the next 1 year.
Space sector, we were expecting a good year this year. Like FY24, we were expecting to book some revenues over there and like execute our order book. So is there any development on that front?
Yeah, in fact, it is already due for a good amount of revenue to be booked. But the only thing is there is a small issue in terms of the export license which is required. It is getting sorted out. In the current year, it should be doing 200 plus crores of revenue.
Okay.
And it should be turning profitable by the end of the year.
Okay. Okay. So you start seeing the numbers, and these numbers are included in your guidance, or this will come as an optionality?
That is not included in our guidance because the share of profit or loss is going to be shown out of the JV.
Okay. Okay. Okay, sir. Okay. Thank you, sir. All the best, sir.
Thank you.
Thank you.
A request to all the participants. Please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. Next question is from the line of Sarjeet Yadav from Mount Intra Finance. Please go ahead.
Good morning, Team Astra, and firstly, congratulations to all of you for the wonderful results. I'm Sarjeet Yadav, and I'm representing Mount Intra Finance, and I met Mr. Reddy.
Your voice is not coming clear.
Is it better now?
It's still the same.
Okay.
This is better.
This is better. Okay. So, Mr. Reddy, I have met you like a couple of times in DEF Expo and other events, and I've been associated with the SDRs and the various radar programs through Bill since I was serving in Army Air Defense for 22 years. Presently, my question firstly is regarding the software-defined radio, the order of 150 crores which you have been received. I just missed out during the brief. That order is from whom, in case you can share that. This is the first question. And then I will move on to this next question. Can you please let us know?
Yeah, this particular order is from HAL to supply 47 numbers of radars, LDRs.
Okay. Next, as per the RR assessment, there's an approximate requirement of about 55,000 of the software-defined radios among the three services, and our calculation says that it's a market opportunity of about 12,000 crores for all three services, and it may take about 8 to 10 years for the requirement to be completed. And linearly, if we put it, the opportunity is about 1,200 to 1,500 crores per year, although it may not come in the same manner. So I would like to know what's your comment on this opportunity size and Astra's options in this order and any competitors in case they are there.
Yeah, rightly said, all these armed forces now trying to replace the conventional radio with the software-defined radio. Towards that, Air Force started their, replacing first, and Rafael has backed this contract about 6 years back for 400 sets of radios, which our joint venture is manufacturing now. And we are getting repeat orders from various agencies, for the various platforms from the Air Force. Similarly, in the Army front, we have participated in a couple of tenders. Recently, we participated one infantry and the other one is Armed Corps, where we emerged a successful bidder in infantry case, where in the other case we lost it on the price front. And this negotiations are going on, and probably we will be getting order in a couple of months' time now. And apart from that, we have also participated in Make 2 for the vehicle mountain version of this SDR, where again out of many companies who participated in that, I understand only from few companies got shortlisted. We are there among few companies where first round of evaluation has been successfully completed, and we're planning to go for NCNC trials sometime in August, September. So this is again the other contract which we are aiming for it. Similarly, the Army is looking for more radios in future when they conclude this particular case. Likewise, there is a good amount of potential for this SDR future, and our team projecting close to around 10,000 radios in next about 5 to 8 years time frame.
Okay, so I just missed out one thing. You said that you are successful in the infantry RFP.
Yeah.
Okay. Thank you, Mr. Reddy. And
significant portion of, to answer your question completely, a portion of the business does flow down to Astra itself.
Okay, as subsystem, is that what you're saying? Portion of the, sorry, hello?
The SDRs which are supplied through the JV, a portion of that flows down into Astra itself.
Yes, of course. Thank you. Yeah. Thank you, Mr. Reddy, and all the best to Team Astra.
Thank you.
Thank you. Requesting all the participants to restrict to 2 questions per participant. Next question is from the line of Aman Vij from AlphaStreet Investment Management. Please go ahead.
Yeah, good morning, sir. My question is on the space division. So, ISRO today successfully launched the NBS-01, and I believe we would be providing the payload for that satellite. I could be wrong on that part. if you can confirm that, as well as so ISRO has launched like 4 launches done this year already and 5 more are planned. So typically in a year, what is the contribution from Astra to the ISRO payloads, and where do you see this number in the next 2-3 years? This is the first question.
Yeah, possibly the satellite being launched today, NAVIC satellite 01, NVS-01, or we call IRMS series of satellites. In that, we don't have any contribution in the satellite payload, but as I mentioned, we have developed this NAVIC receiver for the applications, and that will, definitely will boost our business, in coming years. So we are there in NAVIC, but otherwise in satellite payload, we are not there in that, in this particular series. All other satellites like radar imaging satellites, we have been supplying subsystems to ISRO. Today, whatever order we have on hand is for radar imaging satellite, that is for RSI 1B and as well as 2A. This is under production now. And all communication satellite, we have been supplying RF and microwave subsystems to ISRO. So going forward, yes, all strategic applications, ISRO is still continuing to build these satellites. We will be there in that as a subsystem supplier. Apart from that, we also initiated discussion with defense forces to build this R payload, and we joined, we formed an MOU and we entered into an agreement with a startup company to build this SAR payload for the defense forces. And we are also expanding our, capability in terms of building the complete satellite in future. This is as far as the space business is concerned.
Sure, sir. My second question is, so on the, there were some big tenders on the active protection side as a system, APS systems, as well as on the SDR also. So on SDR, continuing, you've explained it very nicely, the last participant. Normally the indigenization, if you can talk about what percentage do we do, because my understanding is as of now gross margins are low, a little better than export, but still lower than the domestic defense business. But going forward 2-3 years down the line, do you see we doing more indigenization and the gross margin here? Where can we see the gross margin here on FDR, as well as if you can talk about this active protection system? Any update on that?
Yeah. Active protection system, we backed the contract from DRDO to develop this particular system. It's in development stage now. By end of this financial year, we will develop this system and will hand over to DRDO. They take another 1.5 year time frame for us to participate in the NCNC trials along with the DRDO technology. That's as far as the APS is concerned. And coming to your question in SDR, as we have a better margins as compared to the other export business, as we have been doing it indigenously, most of the RF portion in Astra. And we are also increasing the indigenization content in complete SDR, as joint venture is working on that. We are also developing the waveforms, which is the crucial part of the SDR, and all other hardware required for SDR. So going forward, the indigenous content is going up, and the margins also will become much better for both JV as well as for Astra.
Thank you. The next question is from the line of Abhijit Mitra from Aeoni's Alpha. Please go ahead.
Yeah, thanks for taking my question. So this question is on the possible acquisition in order book over the next couple of years. So thanks for a detailed presentation. I think in the presentation I can see almost 2,000 crores of potential radar orders that can accrue in 24 only. So can you just take us through as to your confidence in winning these orders? Where exactly have you sort of added value? Because a couple of them are DRDO programs. I can see long range radar and LRSAM and AEWC-11 opportunities. So just to sort of assess your confidence in sort of bagging these orders and your value add in these programs, and given that they're expected in 24 only.
Yeah, in FY24, against the overall business visibility of 2,000 crores around in that, we have few production orders to be received from BPSUs, like one is at MPR, the one major contract which are we are planning to book it in sometime in Q2 also. And apart from that, we also been working with the BEL, as we are one of the qualified suppliers for few radars like ASR, the one radar which BEL has received order recently, and the other radars like weapon locating radar, and even for Akash Prime we are working with BEL to supply these subsystems. These are all production orders. As far as development is concerned, we are also participating in many of these DRDO development projects like AWC Mark II, as well as HISAR and Su-30 radar. These are all going to be in competitive mode, and we have been participating in that.
Okay. And what about the order opportunity from anti-drone system in 24? Because I think that's another big order contract value that I can see.
Yes, we participated in a few RFIs and are going to be converted in RFP soon. And we see at least the potential for, because this is the first year of the market where we are entering into this domain. Maybe we have taken only a small portion of it, about close to 40 to 50 crores in this current year. But going forward, I think we will have more orders in this particular segment.
Got it. That's all from my side.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Yeah, thanks for the opportunity. So just wanted to know, we had guided for around 850 crores of revenue at the beginning of the year. So what was the reason for lower execution?
We have given 950 crores, not 850.
No, I'm just saying last year when we had guided for 850 crores of revenue, whereas we have done only 816.
We missed out few R&D projects in the last quarter because of, we got into some technical issues, but finally we got sorted out, and but we couldn't book the sales by 31st March. Couple of R&D projects we missed out.
Okay. So these were in collaboration with DRDO?
No, yeah, these are all orders again from DRDO.
Okay. So secondly, someone did mention on the call that we would be doing around 10,000 crores of revenue for the next 5 years. So 850 plus. So if I assume 2,000 crores of revenue in first 2 years, then around 8,000 crores of execution needs to be done in next 3 years. So do you think that this raise is sufficient enough? Because then since a lot of our investment would also be going into the growth capital part of it. So would we need to raise funds for the further orders which would come? Because working capital is always elongated in such orders.
As of today, we don't see any further requirement of raising funds from the capital market. But in terms of the numbers, whatever was quoted earlier, in fact, we already guided in our KAP presentation. Cumulatively for the next 5 years, we said we should be around 8,000 plus crores. So we are comfortable to reach that number with the existing resources available.
Okay. Thanks a lot and all the best.
Thank you.
Thank you. Next question is from the line of Dipen Vakil from InCred Capital. Please go ahead.
Thank you for the opportunity, sir. So just another follow-up question on the 10,000 crore guidance that you are given for next 5 years. While I understand the detailed breakup won't be possible, but can you tell us as to where can we expect the accelerated growth to come from? Like currently we're expecting growth of around 17%. So there has to be an aggressive growth going ahead from some segment.
Hello, your voice is not clear. Can you repeat question?
So my question is, you mentioned about the 10,000 crore guidance for 5 years. So I just wanted to know, where do you expect the accelerated growth to come from? So in which segment?
Yeah, in the radar is one segment where we expect at least about close to 50% of the business should come from that segment alone. As we been mentioned in the document and also in the last few earning calls meeting, we've been entering into the systems domain in the radars, apart from the subsystem market, which we are already addressing. In the systems, yes, definitely will give us a good growth as compared to the last few years. And in this, there is a segment where we are expecting a lot of growth to happen in the coming years. And even in EW front also, like we started entering into the systems, and that segment will give us a better business as compared to what we did in last few years. These are the two major segments where we are entering into the systems domain. And apart from that, we are also looking at that, satellite payloads and even other business areas, which in fact we initiated the development plan. And the growth, as we informed, is a rare and great growth. Like, last couple of years, like, the FY23 onwards, we should have good revenue projections as far as the business is concerned.
Thank you so much for that. Really positive. My second question is on the space division. So when do you expect the space division to start meaningfully contribute to your revenues?
Come again.
When do you expect your space revenues to start meaningfully contribute to your revenues?
Space revenue, the current year, actually these 2 years, we have the order book of 250 crores, which we are going to execute that. We will be completing. But the development, what we have initiated, I think that will give us business from starting from FY26.
Okay. Thank you so much, sir, and all the very best for your strong education.
Thank you.
Thank you. Next question is from the line of Hitanshu Bhatia from Gandhi Securities. Please go ahead.
Yeah, hi. My question was regarding our progress on the NavIC chip receiver. If you could just guide me with where are we on the progress of finally, getting the final product done with the NavIC chip receiver.
I think I just answered this question, but anyway, again, I'll repeat. Our basic chip, baseband chip, are getting qualified by ISRO. It is almost the testing and being completed, and we are waiting for the final approval, which will happen in next few weeks' time. And also the end product for the using that chip, we are developing a few products like vehicle tracking unit, course receiver, timing receiver. These are the products which we will be developing internally, and this will come out maybe in 3 to 4 months time frame from now.
And you might be aware, sir, that Elena Geo Systems has just launched the chip.
Yes. We are aware of it.
So, any comments on that, sir?
No, we don't want to comment on that company product. We can give you comments on our product, not on the other product.
Okay, sir. Thank you. Thank you. All the best.
Thank you. Participants, you may press star and 1 to ask the question. Next follow-up question is from the line of Aman Vij from AlphaStreet Investments. Please go ahead.
Yeah, sir. My questions on the systems. We are moving towards systems. As of now, what percentage of our revenue do you think will come in systems in FY24? And where do you see this number in the next 2-3 years? And if you can also talk about, there are a lot of programs we are participating in. So where are we strong as a system provider? If you can talk about the same.
Yeah. This, the current year, we have been 950 crores, close to 200 crores should come from the systems, and the rest is subsystems and other products. But going forward, yes, I think from FY26 onwards, I think the systems business will have a major portion of our revenue as well as these products.
And sorry, sir, if you can talk about which are the programs, because there are a lot of programs where we will still remain a subsystem provider, but in some programs we are moving towards system. So which are those programs, if you can talk about the same?
See, like we are addressing in both the categories. One is DRDO opportunities, and the other one is the armed forces, MOD direct opportunities, where we have participated in RFI, and few of them are like getting converted into RFPs. To give you a few examples, like one is body detection radar, the other one is low-level lightweight radar to build up, and then we also were participating in ADTC. That is another RFI which has come. These are all systems which we have a core technology and expertise is being already built in our company. So we are developing these systems to participate in these tenders. And apart from that, DRDO is also coming out a few systems where we have identified few companies. Though we are in competition, we are trying to get into those projects.
Sure, sir. My next question is on the bid pipeline for FY24. So in the presentation, you have clearly given there are a lot of programs coming up in FY24 itself. So, and in your previous call, we have explained there that there are some programs where we are like 100% we will be winning it because we are the sole player, versus some where we have 50% probability because there are some other competition. So for FY24 specifically, what is our what do you think will be our bid pipeline, and out of which portion do you think, how much portion do you think we will have like 100% probability kind of scenario?
In 1,000 crore order book, what we are projecting for the current year, 500 crores is something which we are proprietary in nature, or in, I would say, single tender. The rest 500, we have taken it from two categories. One is from the limited competition, and then the third one is the open competition. And all put together, we are planning to book 1,000 crores from the current year.
Okay, but the way you have explained very nicely in the presentation, the bids that is coming up is maybe of 3,000-4,000 crore itself. So you are only incorporating a 500 crore bid out of that whole pie in our order book, forward order book.
I didn't get you. Come again?
So sir, in the presentation, you have nicely explained there are a lot of orders where we don't have proprietary nature, but still it will be mostly tender driven. But that whole pie is a much bigger amount than what we are taking into our order book of 500 crore. So my question was, are we being conservative on that part, or this number can be a much bigger number?
We are a little conservative because the only issue here is the timing of the orders. We have given the guidelines for the next 5 years with that particular number, and we are talking specific to this particular year. I'm a little conservative because it all depends on the timing of the project. In the sense, the process time. It is not the budget and all. Budgets have been allocated, and even a few contracts have been already in the pipeline and all. So all these things will happen, but when we are talking about the exact number before 31st March 2024, this is what we are a little conservative, but definitely it may go up.
Thank you. I request to all the participants, please restrict to 2 questions per participant. If time permits, please come back to question queue for a follow-up question. The next question is from Shantanu Chatterjee from Mount Intra Finance. Please go ahead.
Thank you, sir, for this opportunity, and congratulations for good set of numbers. My first question is, sir, you have shown in the presentation that business potential till 2028 is 7,000 crore for defense products. That is in page number 19. And you have also shown in page number 20 that your total addressable market across all the sectors till FY28 is 24 to 25,000 crore. Now, my question is, are we envisaging bigger order pie from the other sectors than defense? Can you, sir, add some color into it?
Yeah, this 24,000 crores total accessible market includes some of the non-defense projects like turnkey solutions, and also even the NAVIC business, which we are targeting, also being included in that, apart from the defense and aerospace segment. And in the meteorology, hydrology front also, we are entering into the various systems like avalanche radar, even Doppler weather radar, also in airport weather monitoring radars. These are the few projects, systems which we have taken up development. All put together, we have taken around 24 to 25,000 crores of total accessible market, apart from the defense and aerospace segment.
That means, can I presume, sir, other than defense segment will contribute heavily towards future revenue?
Yeah, defense is the major, growth factor. Definitely will have more thing in the overall 7,000 crores what we have considered in the next 5 years.
Okay, sir. And my second question is, sir, in the current order, can you categorize how much belongs from the subsystem and how much from the whole system?
The current order in 1546, in this we have close to 300 crores for systems and the rest are on subsystems.
Okay, sir. Thanks a lot and best of luck, sir.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question.
Yeah, Naveen, can you make it the last 2 questions? We're running short of time.
Sure, sir. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I will now hand the conference over to Mr. S.G. Reddy for closing comments.
Yeah, thank you. And thank you, gentlemen, for your participation, and look forward to talk to you again at the end of Q1. Thank you very much.
Thank you.
Thank you.
Thank you very much. On behalf of Astra Microwave Products Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.